Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. It's heading into the end of the summer here, the end of August. We just had the big speech that everybody was anticipating from Mr. Powell. Really, I didn't really see it too earth-shattering. We had a nice report from Julian on the site on Thursdays, his baby powder report. Neither one of us had actually listened to the whole thing, which is kind of stupid, but oh well. It is what it is. So I'll go back and listen to anything in particular that I glean from his words later on today. But on balance, the market's reaction that I've seen was, and this is so typical of summer markets, that I really didn't want a lot of people getting too sucked into this, was we have just massive volatility injection right through things like New York kill zones, which do nothing more than just absolutely break the weak hand sort of, I want to be a day trader kind of participants that don't realize end of the summer, this often happens. It's very typical of markets. Be careful here, and if anything, be leery. We can only really believe that the real professionals, the entire trading community, is back in earnest once we get beyond that Labor Day weekend. Did Mr. Powell say anything earth-shattering that's going to change the landscape here today? I don't think so. But I will say we are starting to see much more firmness out of things like the US dollar index. And also, too, our breadth indicator, you notice that the fast is actually sort of bumping along. Remember we had talked about this yesterday. We're starting to actually see a little bit of firmness come into names. And then, of course, you got the darlings that are driving the indexes. They're doing all crazy stuff themselves. In fact, actually, I saw Apple Computer has a little bit of an M working in the RSI study, so looking a little heavy. So maybe we finally see the indexes finally play catch up. You notice the S&P 500, and I've kind of told you guys about this before. You can't really see it off of this image, but both of these are getting fairly negative. We haven't really built out the entire sector breadth the way that I would like it. So this is still developing. I'd like to add the country funds and currencies and stuff. But nonetheless, you can see short-term breadth, medium-term breadth. That's all this kind of conversation. They're getting nice and negative now. So ironically enough, we could actually be setting up a scenario where maybe the first week or two of September, actually, we see a little bit of an up tick in the market. I do think it's probably best to just let this Fed event get out of the way, let all the funny little volatility get out of the way, and then we can start going and hunting setups again. So that's basically happened now. Little concerning for things like I have to say crypto's looking a little heavy here. But for your conversation, let's sort of stick to this. So here's our US dollar index that we like to follow. The Fed event here, you can see we've created a doji day. We're actually looking at the euro in particular. I mean, there's Julian was saying there's something like 4 or 5 different bearish divergences working on the euro chart right now. It should look exact opposite to this. So could we see a ratchet back up in the US dollar index, the euro come back down to earth a little bit here over the next week or two? Well, my hunch, I don't know whether it has to happen on the other side of the Labor Day holiday weekend or not. That's a tough one. But, we sort of talked about this before. This trade is awfully one-directional. I thought that the pivot would come in here, but nope. They took the summer to take it another leg lower. You can see that they even left a little price gap at the old breakdown level. So, just nothing more than just, this entire range. 38.2 is just your natural, dead cat bounce level. That's up here. And as I said, in the things like the euro, there are actually some interesting trading ideas starting to develop there. That is the event, and there is your Fed event. So clearly this is obviously an important level for the marketplace. And I get the impression that's exactly where they wanted the market for this Fed event. So now we're on the other side of it. Let's see which way we go here. If we do keep careening lower, I don't really have a new trade to develop. Like I said, I do actually like the idea of hunting things like head and shoulders tops on things like the euro. Well, we'll see what happens. Only time will tell. But it does feel as though there's some sort of trade developing in there. Also, too, I'm up here in Canada. Canadian dollars had a huge rally. I won't go into it today, but I really do like the idea of locking in some Canadian dollar sells up here as well. Anyway, we'll see what happens. So with that Doji Day, Fed governors in Wyoming, talking about the fate of the world. I guess it shouldn't surprise us that on the event day, the S&P 500 is the risk asset in the marketplace, puts in a big fat Doji. Also, too, we've gone beyond chaos levels. Remember how, the gold market went zipping beyond the chaos level, but then, a few days later, oh, bam! So, could we see the bam here coming out of that Labor Day holiday weekend? Maybe. I mean, let's call a spade a spade. Any professional's going to look at this chart and go, "What's a 50% roll?" I don't know. It'd be interesting. I don't think we trade back down to this reload zone, but just a very natural, healthy 50% retracement of this range wherever the top comes in. All that. Gee whiz, look at that. We already highlighted the gap that's sitting there wide open. And interestingly enough, that's actually where the market originally wanted to go based on things like, A, B, C, Ds and heads and shoulders is I think the market really... It wants to be around this area, but that late summer silly season, this is fluff. And unfortunately, this is where barstool guys get caught. This could get a little dangerous here for anybody chasing the market up top here. Interestingly enough, with the breadth indicator, at the bottom end of its range, I do see some interesting trades developing. So I actually did come in on the buy side on a couple names here today, anticipating that, if I get a double bottom on, momentum divergences at the bottom ends of ranges, that kind of conversation, I trade setups. So, there were actually a couple names that I did buy today, believe it or not. Having said that, looking at this particular asset, the big U.S. stock market, I couldn't touch this. I just couldn't. Maybe, our little names that did bottom today and that we did W buy, maybe they're the kind of things that push this thing to new highs. But I couldn't buy the S&P itself. Only time will tell, I suppose. Interesting, we've been following along the crude oil story, looking for our next top. Hurricanes in the Gulf push prices to new highs here. This might be an empire. You know what? If this does empire out here being on a Friday, if we open up through the lows there on Sunday, Monday, let's maybe consider that as our next opportunity. Who knows? You never know what'll happen in this crazy game. We have come up and filled in gaps here, so I am feeling as though, maybe we have to rally up top here. I doubt it. But let's keep an eye on this as it stands right now today. There is nothing for us to do. Did see that the oil stocks that we're trying to press higher, they're not moving higher. So this might be one of those situations where if you have the stocks not moving higher, the commodity is moving higher, that's a divergence, and that's actually a reason to consider taking a trade. So we kind of noticed, remember, I think it was about a month or so ago, I bought some Newmont calls. The gold price was moving higher, but the Newmont kind of stalled out, and I was like, you know what, I want to get the fuck out of here. Shortly thereafter, the gold had its big punch in the nose. So, I don't know. Keep an eye on things like Schlumberger and Halliburton and stuff as proxies in the oil space, not moving to new highs, even though the oil is. Maybe a little bit of a trouble sign there. Interesting, on the flip side, the bond market really got punched hard here on Powell's statements, and really it makes sense. I'm thinking that the bond market is somewhere near some sort of 35-year pivot. And keep in mind, interest rates are at nothing. What does your long-term 35-year cycle pivot in the bond market look like? Does it look like this absolute mess? Maybe a nice billiard ball kind of fractal. I've shown you billiard balls in the past. I don't know whether you guys have caught on to that idea, but that would, if this is a billiard ball, that would look for a move down into these lows. Stock market maybe moves higher into the early fall. Then, calamity, huge rally, panic, spike up. Maybe COVID comes back really hard. Who knows? And then we roll over, and that'll carve out the most beautiful billiard ball. Fractal, who knows? Only time will tell. As it stands right now, it looks like we're working our way back down to the bottom end of the range here. Fascinating how this ABCD had to play itself out, and then as soon as that was done, back down we go. And the irony of it all is I still think both of these levels are totally valid. And ultimately, interestingly enough, if this is a billiard ball, right, we'd come down here and then spike up and hit that objective. And then maybe finally we come down here. Who knows? But as I said, Powell basically saying, hey, we like inflation. Our official policy now is we want inflation. That's probably not going to do very well for the bonds. And keep in mind, bonds are, especially something like this, the long bond, it is the most sensitive. So if we do actually get back into that world of inflation, this thing's going to roll over and it's going to start trending down. And the irony of it all is I don't think many people watching this channel even know what a rising interest rate environment looks like. Trust me, it's no fun. But I don't think we have to worry about like runaway interest rates and hyperinflation. For now, I think it's more sort of like how do we actually transition from deflation back into an inflation world. Wow, that sure was a long rant. What I will say, just to finish this off, is what happens in a world where the only reason why this thing was going up was because, Feds continue to buy bonds, buying corporate bonds. What happens if part of we like inflation now, so we're not going to buy any bonds anymore. We're going to let prices fall, i.e. interest rates go up. You might see inflation come back extremely quickly. That's what often happens with inflation. And then once it's built back into the system, you can't stop it. So anyway, we'll see what happens. Only time will tell. Long and short of it here, bonds are pointing lower, and they look like they're pointing seriously lower here. Maybe this is what ultimately ends the stock market rally, when these things start going, hey, you better look over here and pay attention. Kind of like what we saw through here. That was the last time the market had to take a bit of a pause. So, with that said, interesting to watch how the gold market, especially if we can get some sort of top in the oil. Now, interesting, bonds breaking down. That should be bullish of oil, right? Risk off, risk on kind of conversation. The gold sort of caught in this funny sort of, are we in an inflationary world, or are we in a deflationary world, and I want to get the hell out of everything and just park my money in a nice safe lump of gold sitting on the ground? Either way, it's like a no-win situation in the end, because this market, you can clearly see it's going parabolic, as they say. And, at the end of all this, it'll probably be just like we saw with Bitcoin 2017. Same thing. At the end of this, there'll probably be a year or two of, what happened to the bull, right? And you remember 2018 for crypto, same shit. So, if you're going to play this market, I've always said, what's value? I think that the average cost of production for a typical gold company is around $1,000. So, there's still a good, almost like 50% premium to the value level for gold. So this is just purely, you're playing this momentum push, and you're playing the big Jupiter-Saturn cross, fear, anxiety peak by the human species that probably should happen somewhere around November, December this year. Awesome. um, so with that said, you can be hunting ideas on the long side. There's nothing wrong with that, but just, put this gold market into perspective. If we're going to continue the correction, risk off, and sort of, well, it looks like the Fed's got control of the economies. No more massive money printing. Things are calming down. That's a huge if, of course, right? We'll probably see the gold price work its way lower. If, however, everybody was just going on pause ahead of that Fed event, they just didn't want to take any unnecessary risk, my hunch is they're going to put the trades right back on following the Fed event. So, Fed event has happened. And I thought it was interesting. One low, two lows. You can see the spike. Did we just make a third low? Probably a little early for a guy like me. This is a really good analogy of why I don't like to take trades on trendline tests. If we're a bull, we really want to see this thing go and break the trend line, then W on the other side of the trend line. That's the best trade. So you can see heading into that Jackson Hole event, and Mr. Fed speaks, and really, this actually makes it fairly easy for us, if you really want to play this market. Because now you can clearly see, you've heard me talk about bull-bear battle lines. So you can clearly see this was the kind of trap move, if you will. Could probably even draw that off of that high there. Whoops. And unfortunately, people who buy these trendline breaks, they got bitch slapped here. But notice how they just brought the market right back down against this low. This is why I said, 1, 2, 3. Are we getting actually 3 higher lows? You can clearly see the W trying to come in here. So I had suggested, and you could draw these levels off of any. I mean, hell, you could do this range right here. But if we just do this range alone, then we can start adding things like good old bot setup levels. Did we do 33? Yes. Did we go beyond 66? No. So if that's the case, then we can say the bot is alive off of this level. And if we're going to trend continuation trade our way higher, we probably want to see like a nice 25 level here to set up that 3-to-1 risk reward. So what does that look like? And boom. And what a coincidence. Do you think that's an accident? I don't. So what it looks like to me here, and ideally I would like this to come on the other side of this trend line. But, 1 low, 2 low, 3 lows if you are a gold bug. Now that we got the Fed event out of the way, you can clearly see if we can get some sort of structure on the other side of this trend line, which is going to be nothing more than a break of that high. We got 1 low, 2 lows, 3 lows. Believe it or not, I wouldn't fault somebody for saying, all right, I'm kind of interested to play this gold market higher into that November, December peak. Is this the resolution of that correction that did nothing more than just wash out the weak hands? I like the look of this. Was it really interesting, of course, is comments there a few minutes ago about the euro. Julian was walking through the long trade in gold, not off of US dollars, but long gold through euros. I kind of like that thinking, it resonates with me. So anyway, there's food for thought. Merry Christmas, Happy New Year, Happy Hanukkah, all that kind of fun stuff. Why don't we leave these bot levels on the chart, and then that way we can just sort of monitor how this develops. And for whatever it's worth, I have heard a lot of market prognosticators saying, 2200, 2300 gold going forward is not out of the question at all. So actually, it's interesting how that paints 2290 as a target. Really cool. And if anything, I have to tell you folks, this is why I like to trade these kind of setups. Where in this case, you might have been getting long, then taking profits. You completely avoid the nonsense. And interestingly enough, if this thing sets up, you're actually going to be going back in on the buy side lower than where you actually sold. That's the way pro traders stay long through a whole bull market and actually make more than what the bull market if you had just bought and hold through the whole cycle. So really good example of why traders like to trade setups and how you can just let the market consolidate to set up the next leg heading higher. Really cool. So with that said, this kind of thinking long again on the gold and then thinking some sort of top here on crude. We've actually had scenarios where the U.S. dollar index has rallied with gold, and people are like, "Why the hell is that happening?" So maybe we get one of those kind of scenarios. Interesting too, if we think about risk on, risk off, our little junior market's not really overly happy. And I do see that. Like I said with the dashboard, we are down at the lows and we're starting to see some back and forth here, but we're not near a buy signal, right? The buy signal will come in when these cross back up. So I get the feeling we're in sort of one of these sort of, it's probably too late to sell, maybe probably even a little too early to buy, even though I did do some nibbling this morning and I can see I'm getting a little bit punished based on my hastiness, but nonetheless, this is a trader's life. In fact, actually, we even through the Daily Brief, we had a great conversation about this. You know what the difference between those people that actually make money from trading and those people that are just spectators and just sort of watch bull markets come and go and bear markets come and go? The difference is the people take setups. They actually step in and they say, well, all this criteria came in, got to pull the trigger. So I thought it was interesting that I've been squawking about the leisure sector, the cruise sector recently, the travel sector. Maybe they've started to bottom out. I actually have a bullish setup if I get a trendline break here, which I did, and then a W on the other side of the trendline break. That's a setup for me. This is also a momentum setup, a move back to the 50% rule. So I just simply said, look, if this big W comes in, I'm going to buy. So they actually opened it up this morning. They took it up through the top. I bought, and you can see I'm sitting underwater. Hey, way to go, Brian. I have no idea whether this trade's going to work or not. I really don't know. But all I do is I trade W's. So I bought here. I'm going to risk to a break of these lows, and my ultimate objective is up in this $30 area. If I'm right, I get paid quite a bit more than if I'm wrong. You just got to live with the results. I have no idea what's going to happen here. But like I said, I did say that I was going to pull the trigger if that event happened, so I pulled the trigger. I might get stopped out by the end of today. That's a trader's life. Looking at things like the ES, looking at things like the way the oil market looks a bit toppy, looking at gold trying to bottom. Interesting how bonds don't fit into that picture, but all of that, this does sort of correspond with that, and also too, like our breadth indicator, it broke down, where is that? July 27th, 28th. So you can see, what's this peak? 27. So our breadth indicator at TRI actually started to flash warnings here. And this is usually what these corrections look like. Was this a bit hasty? There wasn't any M that came in here. Oh, here is where the M is, and sure enough, down we go. But the end result is market moved up quite a bit, got overbought, and now market's moving down, and we're cleaning that up. It's interesting, our breadth, you can see we've got this kilo, we've got this kilo, we're coming into these kilos. Does the market turn? And, it might be something along the lines of this is sort of like early anticipating that some names are starting to try and turn here, but it doesn't. We might be a bit early. That's sort of like, do we turn here against these lows? Yeah, we'll see. Only time will tell, as they say. Trader's life. So maybe a little bit of bottom fishing right now, probing against low ends of ranges, starting to get the smatterings of buys, but not overly bullish. Not like, holy fuck, this thing's going straight up. And actually, the one tell that was a little bit concerning about this is we just didn't see a big ramp up in volume. As I think I've said recently, I have been watching this whole sector pretty closely. Which screen do I have that on? It's one of these screens. And I noticed that the whole area, the market, it was looking interesting there, but the buyers just didn't come in this morning. So it's a little disappointing. You can see Royal Caribbean, it's moving higher. My little hotel REIT, and actually it's interesting. Julian's watching that Simon Properties. It put in an interesting bar there a few days ago. Interesting pattern. There's my little Carnival Cruise Lines. Did not see any traction. Interesting how Royal did. The airlines, Delta's happy. Southwest, which I would consider probably one of the best U.S. airlines, it's happy. And Julian was interested in this save. But interesting, I said there just a moment ago, the buying volume pressure just didn't come in this morning on these kind of names. But, same sort of thing. Buy, you got one low, two lows. Yeah, we got a nice third low and turn back up, make a cup and handle. This one looks kind of compelling too. He's almost there, but kind of like my Carnival. You can kind of see they all jumped up. Anticipation, maybe the Fed's going to go print a bunch more money and it's another big party. And these guys all backed off. Boo, hiss, hiss, boo. But, traders got to trade. It's interesting how setups are starting to develop. W's are starting to develop, so I'm stepping into the breach. Not a hell of a lot of money. This trade alone was about 1% of the stake that we have on this particular account. So it's just simple, friendly board lot. And like I said, we break 1275 area. I'll just walk away. No emotion whatsoever. All right, so that's sort of stock market-y. Crypto, problem with crypto is it's not cheap. Even the altcoins, they were cheap for quite a while, but look how they've bid these damn things up. So, message really hasn't changed a hell of a lot from Brian. Value, it's the same thing as the gold market. Value, in my opinion, right now on Bitcoin is about half of what the current price is. Yeah, that's right. I said half. Kind of like gold. Value in the gold market is about half of what current prices are. But if we're wrapped up in emotion and people are not thinking, value and, what is this thing actually worth, and they're just panic buying, then they'll bid these prices up to the roof. That's capitalism. The only problem that I have here, of course, is, and our big lesson about divergence. When you start to see momentum indicators not making new highs, but the asset itself is making new highs in price, that's a big warning sign. And so our message through here was, Bitcoin might be awesome, but if you see these momentum divergence signs, you're best just to cool your jets and just let the market settle down. In this particular case, it didn't mean collapse in price. It just meant sideways. Because of money printing, all that crap, I get the impression without the crap, this thing probably would have bounced off of some sort of Ides of March pivot anyway. And then would have probably come down and, done normal reload zones and maybe even kept trending lower. Who knows? But through that July pivot, we were looking end of June, beginning of July. You can see how the market said, no more down. I go up now. So here we are, and this was actually a pretty darn good looking little breakout here. You can see we had momentum rising, W's and things like RSI, even volume started to ramp up here. I was a little disappointed we didn't get massive volume surge here, so I didn't get too excited about this breakout, but you can see the volume came in after the little W came in here, and it was a pretty good rally window. But what's the state of the market now? Now, you see the higher highs in price, but you can see the momentum indicators are not making higher highs. So probably, we have a general rule at TRI. If you see this situation, you're best just to cool your jets. Just wait. There's no hurry. No idea how this is going to play out, right? Maybe we go head and shoulders and who knows? It could. Maybe we do exactly like what we did through here, right? Lots of back and forth, drive everybody crazy, just go sideways and continue our way higher. But the long and short of it here is you got to just cool your jets until this crap finishes and plays itself out. I don't know whether I really like the idea of getting into predicting what's going to happen here because, frankly speaking, this year is a mess. I told you at the beginning of the year, I wouldn't be surprised if by the end of the year, most people have no respect for financial management advisors and stuff. Mr. Barstool is going to own this world, right? Just buy everything, you're guaranteed to go up. And then, of course, everybody gets lulled into a false sense of complacency and false sense of confidence, and then boom! I still think that's the scenario, and I think that the whole thing pivots around this U.S. election, which is still a good, 2.5 months away. And then that the results of this election are going to be contested. And that's probably going to be a month or two of soap opera on the other side of that. And I've also heard, and I thought this was interesting, China is ramping up military exercises in the South China Sea, and they're planning to do something through that confusion of the election because there's going to be no leadership. Who the hell's leading? Who's driving the boat? Who's driving the bus? Who actually gives the orders? So talk about a perfect potion for disaster, right? Oh well, can't write better fiction than reality. The simple message for all of you guys should be, and especially you people, you're doing a great job. There was one gentleman, I had to tweet it out. I was so damn impressed. I mean, you sit and listen to me day after day, and hats off to you, and you guys are actually hearing me, which is fantastic. So, because remember, I do this for free. Nobody's paying me. Google, have you seen how many people watch this video? I mean, the irony of it all is it's only the people that really hunt for this stuff that can really find it. But anyway, I was so impressed with this. And somebody was like, fucking just give that guy a course for free, man. I mean, he's actually learning. This is great. And you'll be in the raffle. I'm not going to give you it for free. If fate says that you are supposed to take the course this fall for free, then so be it. My suggestion, ironically enough, is those people actually spend money and actually have to pay for the course material. I used to get into so much trouble with people when I used to try and teach this stuff for free. And we used to have people blow themselves up all the time because they would break the rules constantly because they didn't value the information I was giving them. So believe it or not, it's actually in your best interest to actually have some of your own money on the line here paying for this course because then you'll pay attention. But I was just so exceedingly pleased to see this kind of response because I asked you guys if you want to be in the raffle, and we'd love to have you participate in the raffle. We have a seat up for grabs for this fall term, but you have to reply in the comments field that you want to be in the raffle, specifically say so please, and tell me something that you've learned through these free videos. So like I said, this person's response was just beautiful. And of course, when I saw that, I was like, I have to retweet that shit out. Awesome. The team also has a promotional event coming up here. And I think what I'd like to ask of you is The enrollment in our fall program doesn't begin for a week. So what I would like to ask of you is, if you want to put your name in the comments field with the what did you learn? I love that. But maybe pop on over here too and just throw your name and your email address in this, because and really there should be some sort of reference to the raffle. We wouldn't mind. I mean, it's a lot of work for Kevin to have to go through all the feed and collect all the names and stuff. And this just builds a nice little list for us to work off of. So I'm gonna post this also in the video. I guess in the description or the comments. I'm not quite sure how to do this. And if you'd like to, and I would request of you, if you could just pop in here and throw your name and your email address. That way we have a nice polite list for the contest. And like I said, we should have some sort of reference here to the raffle here. We'll probably get that fixed up in the next day or so. So raffle's going to be not this weekend, but next weekend. So we have lots of time to continually bring the message to you, and of course hopefully we get lots of people who are interested, because it always makes for a fun wheel to build. Okay, so I just wanted to make reference to that, and like I said, I'll put that in the YouTube page. I'm not even quite sure how to do that, but I'm sure Kevin will be able to help me with that. All right, so back to our original conversation. I'm just sort of having fun talking today. I hope you guys don't mind. So what's sort of going on here in the short term? We definitely have a range here that's been established over the past, basically the summer silly season. You might even argue that this summer silly season range could easily be taken back. You can see 38.2s of the entire range. And there's reload zones, 61.8, 78.6. My hunch is that 38.2 probably lines up with the Leprechavark level, or 88.6 fib. Let's see. And let's see where that 88.6 lines up off this original double bottom. Because I think that, if you were going to try and snipe this market, oh, look at that. Fuck me. Kevin, do you see that? 88.6, the original breakout bottom right down in here, 38.2, and it would also be a nice little tag of this trend line here. So my hunch is once this is all done, whatever's going on up here, the resolution is down in here. That's my hunch. Yeah, take it for whatever it's worth. If we kind of think market symmetry, you can see how long this took to develop. So I don't think this happens tomorrow, right? Even if we go, let's say, off of that low, all the way up to that high, then just simply take the study and just ask, is this a fractal? Is this, because keep in mind, that's the way most markets like to move. So I'll just flip that around. So in essence, that's just this range inverted. And you get a nice little market symmetry study that looks something like this. So you can see down, up, down, up. I still think there's a little bit more sort of down, uppy in here. And gee whiz, what a coincidence. Can you see how that's after Labor Day weekend? There is Labor Day right in there. And a big repricing take us right back down to the original bottom. So I'm probably going to leave this on the screen because I think that'll be a half decent little roadmap for us to use. And it's kind of an interesting sort of a side convo. These market symmetry studies, you never know how they're going to play out. You just don't know. So I thought this was an interesting one. This is basically looking at this, what I still think was a hugely significant celestial event. This June 30th, July 1st, Jupiter, Saturn, Pluto pivot. We had one here, and I expect another one here. If we think about that as sort of like the midpoint of this crazy-ass range, and we just do a market symmetry study and just project that, what does the price action look like? This is assuming that it looks exact opposite, right? History never repeats, but it often rhymes. So interesting. We did have a big surge up here, but notice the back and forth, back and forth, back and forth, new highs. So back and forth, new highs. Then, little bit of, shitty. I gotta tell you, man, it doesn't necessarily mean that we have to collapse in price here, but a period of maybe tough sledding ahead of us. Maybe that brings us back down into this original low, like I said, that 38.2 and the 88.6. I could see that. It's not unrealistic. Also, too, if we look at things like good old Ethereum, we don't even have Willie Stupid yet. This stuff, remember I said earlier, when you see bearish divergences, you're best just to let it play itself out. Starting to get moving average crosses here. That's not a good sign, right? Moving average, here is a bullish cross. What happened next? Here is a bearish cross. What happened next? I mean, moving averages, this is why I like to use them. Moving average crossed. What happened next? Sometimes you can get into a bit of a chop period, and that's fine. If we want to chop sideways here, cool. Show me, 3 higher lows, and I can start thinking trend continuation. But as it stands right now, I'm kind of frozen out. There's just nothing for me, a guy like me, to do on something like this right now. And like I said, with the corn looking the way that it is, same sort of thing. It's just not a hell of a lot to do. Finish off this video here. Just a quick mention about things like poop coins. Yeah, poop coin index, gee whiz, this is looking awfully nosebleedy, eh? So, interesting how we hit an 877 there. You never know how these damn things are going to play out. Be interesting if that was a 200% range extension, kind of like thinking parking garages. While this looks like this, it's awfully tough for me to chase anything up there. If anything, this is the don't chase kind of market. I was kind of hoping to see a little bit more uppy because look at this. I had like this storage. I'm already, I mean, you guys, I think I told you the story. Go back and watch the old videos. I'm in the money now, so that's good. But all my nibbles, this is actually where my sell order is, still a million miles away. And we had a couple others that were starting to come up into sell orders, which was kind of fun, but realistic, I don't know. That's a tough one. This is another one that I bought all the way along the down move here, all the way from this Argon. So my average cost is in this area, and you can see there's my double level, but no, sorry, you're done. Little decred I picked up here recently. No, this is Power Ledger. This is a different one. You can see back down into the range. Probably going to fill that gap in there. So I'm not seeing a huge hurry. That icon, same sort of thing, jumped up, pulling back into the original bottom. Digi, same sort of thing. He actually ran up to his move stop to trailing level. So now that it's starting to show some structural failure, if you were long Digi, I might suggest hopping off there. You can kind of see them. They're kind of slowly eroding here. So be careful. If anything, don't chase. You've heard me say this. Kind of names that I'm trying to buy, I can't get filled on, of course. This Geo. Look at what they did to me again, the bastards. Jesus Christ, this is getting frustrating. I got my bid sitting right, and it's interesting. Here they don't show a gap, but on the actual maybe because this is a daily chart. If I go down to like an hourly. I got my bid right at these gaps, and they just won't fill me, the bastards. So I've got a bid. There's a gap here. I'm not quite sure. It doesn't seem to be showing here. And then I got another bid down in here. And look at this. Right down. Crypto is all nosebleedy. Oh, it's all falling. And then what do? They take it right back up. Bastards! Anyway, just got to be patient. So no chasing. Not allowed to chase. You see where the bottoms are. Work your bids. Blah, blah, blah. Same thing on Ubic. And I think these two are actually moving in sort of lockstep here. Can't chase. Bids working down below. All right, that's about the summary of the market for you right now. There's our Decred. Decred's come back down to the original bottom after hitting its chaos level. So here we are, basically where I bought it. No big deal. Just sort of sitting there. And actually, look at this. Oh, Dash, I might actually get some fills here. So that's kind of cool. All right. So there you go. I hope you guys enjoyed that presentation. Probably a little too long. But what the hell, I felt like blabbing, so I blabbed. Alright, have yourselves a great day, everybody. Be sure, if you're interested in the raffle, put your name down, something that you learned. And if you could pop over to that page and throw us your name and email, at least we have a nice, neat list there to work with. I'll post that in the description below. Alright, all the best, and bye for now.